Good evening, everyone. I'm from Sri Venkateswara College of Engineering. My name is Monica. I'm going to talk about journal, ledger, and trial balance. The subject is financial accounting and reporting. The subject code is MBA 102. I'm going to submit this presentation to Sudha Ma'am, Assistant Professor of MBA Department in Sri Venkateswara College of Engineering. Accounting cycle. Accounting cycle starts from journal, journal to ledger, ledger to trial balance to trading and profit and loss account, from that to last balance sheet. From journal, we take all the information and post in ledger. From ledger, we try to balance the given information data in trial balance. From trial balance, we post the information to profit and loss account. From that, lastly, we'll make a tally in balance sheet. Journal entries. Book of original or prime entry as business transactions are recorded at the first instance. Transaction recorded in the order in which they occur. It is basic book of accounting. The process of entering or recording transactions in the journal is called journalizing. The record of each transaction in the journal is called journal entries. Rules of debit and credit. There are three different types of rules. First one, personal account. In personal account, there is debit the receiver and credit the giver. Second one, real account. In real account, debit what comes in and credit what goes out. In nominal account, debit all expenses and losses, credit all gains and incomes. Advantages of journal. First point, journal provides a chronological information. Example, data-wise record all business transactions at one place. Second point, transaction recorded and when they take place, chances of any transaction being unrecorded is reduced to the minimum. Third point, facilitates preparation of legal accounts. Fourth one, serves as evidence in the court of law. Fifth one, transactions recorded with narrations, reasons for each transaction can be assigned. Disadvantages of journal. When the number of transactions is very large, it may particularly be difficult, if not impossible, to record all the transactions through one journal because of the following reasons. First one, the system of recording all the transactions in a journal requires the written down the name of the account involves many times as the transaction occurs. Second one, such a system does not provide the information on promotion basis. Third point, such a system does not facilitate the installation of any internal check system since the journal can be handled only by the one person. Ledger account. Book of secondary entry. Transaction recorded in the journal are finally carried to the ledger. Contains all the accounts of a business whether real, personal or nominal. Difference between journal and ledger. Basis, journal and ledger. First one, nature of book. In journal it is book of prime entries. In ledger it is book of secondary entries. Second one, basis of preparation. In journal it is prepared on the basis of source documents. Under ledger it is prepared on the basis of journal. Third one, objective. It is prepared to record all the transaction in chronological order. In ledger, it is prepared to know the net effect of various transactions affecting a particular account. Fourth one, balancing. Journal is not balanced and ledger, all the ledger accounts are balanced and should be balanced. Fifth one, narration. Narration is written for each and every entries in journal. In ledger, no narration is given or written. Sixth one, name of the process. In journal, it is called as journalizing. Under ledger, the process of recording in the ledger is called posting. Meaning of trial balance. Trial balance is a statement containing the balance of all ledger accounts at any given date, arranging in the form of debit and credit columns, placed side by side and prepared with the objective of checking the arithmetic accuracy of ledger posting. Features of trial balance. First one, it is a statement or a schedule. Second one, it contains debit and credit balance of various accounts and entries. Third one, if the trial balance does not agree, it points out that there are some errors. Fourth one, it can be prepared only after balancing all the accounts in the ledger. Without preparing the ledger, the trial balance cannot be made. At last point, it is prepared to check the arithmetic accuracy of book of accounts. Thank you everyone for listening to my explanation.